what are things. We get started with the topic. Let's see where you guys are from. Type in the chat where you guys are from. We also have a lot of exciting rewards that we will be distributing at the end of the session. So stay tuned till the very end. South Africa, Nepal, Australia, United
London,
Kingdom,
New York, USA in the house.
Lovely. Malaysia, Philippines, Pakistan,
Sweden,
London, Sweden, Lisbon.
USA.
Nice. Brilliant. So we have a diversity.
Yes, 100%. I agree.
Awesome. All right, guys. Are you guys ready to start with the session? Is everyone excited?
Yes, okay, fine. So before we start, I know we're seeing a few new faces in here. So let's just have a quick introduction for the host. So Mo, would you like to start first for people that don't know who we are?
Yeah, so we've been hosting psychology sessions every single week, every Wednesday. We discuss a lot of topics that are currently very valuable for all of our traders out there. People have been able to benefit as a result of these psychology sessions, and we've been seeing results popping in left and right. People have been passing their challenges a lot more often now. So that is something that I feel very pleased with seeing. I am basically a market analyst and a platform expert here with We Fund You Trade. I've been a trader myself for the past 10 years. And I focus on the growth of We Fund You Trade, helping traders out there, educating them and coaching them. So I'm literally, from the things that I've experienced in my own personal trading, I'm passing all that information to you guys in order to improve, to become, much better traders and develop as a result, and essentially potentially make payouts with us. And for Alex, introduce yourself to the guys here.
Okay, yeah. Hello everyone. So my name is Alex. I'm part of the We Fund You Trade team. I work in the marketing department, but I'm also a trader. I've been trading for the last couple of years, and I have managed to establish some things in my day-to-day life with the help of Mo, as he's got more experience in the trading world. So with the help of him, and also the help of Dr. Joy, which we've had in our past sessions, those that have been with us since the beginning, we've managed to create plans and actions that we've added into our day-to-day lives, where we become more disciplined and more positive thinking when approaching the markets, I would say, and feeling more in tune with your trading, and also being able to have a trading plan and a trading journal, and being accountable for the things that you do. Saying that, I've managed with the help I've had around me, with Mo's help and Joy's help, I've managed to become a very profitable trader in my own terms, and I've developed my own strategies and trading technicalities, which has put me in the place I am right now. So that's a little quick introduction from your host, Mo and Alex, or Alex and Mo, however you want to call it. But
Lovely,
yeah,
Alex.
so let's crack on.
Thank you for sharing that, Alex. Appreciate it. And I can definitely see that amount of growth that you've shown to the team, to the company, and in your own personal trading, and it's very lovely to see it. So to start off, we are gonna discuss, as I said, the psychological aspects of trading, basically evaluating what you do, how you do it, and how can you improve, whether you are stuck, having results that are not consistent. What can you do in that regard in order to improve and have consistency in your trades? So we will discuss all of that in this session today. So just a brief overview for everyone who's new here, why psychology matters in trading. You might have known traders that have lost large sums of money. They've discussed the markets with you. They have a bad negative experience. And the reason why they've lost that massive amount is because they let their emotion come in the way of their trading. So you see a lot of stories, left and right, of people, oh, I've lost a lot of money. But if you get to the main reason why they've lost this money, you always realize that it's psychological more than technical or fundamental. In my opinion, when it comes to trading, I would say 90% of trading is psychology. And then you get the 10% of 5% technicals, 5% fundamentals, and what you know. Because if you are psychologically strong and can handle your emotions, can be patient, can think on the long term, control your fear and greed, control your impulsive behavior, you will basically conquer this market. However, if you are a person who's emotional, who gets affected by losses, who tend to act out of anger, does not regulate the emotions, you will basically fall in the category of people who say that they've lost large sums of money and it always because of their emotions. So the other thing that I wanted to mention is the importance of having a clear mindset, regulating your emotions on a, or, frequently. And the way you can do that is meditate before you start your trading session. Meditate frequently throughout the day. Maybe have 3 or 4 different meditation sessions. It does not have to be where you meditate for 30 minutes straight. You have to build your way up to being able to meditate for 30 minutes straight, because it takes a lot of mental concentration and clearing all these negative thoughts. So what you can do is meditate for 5 minutes, maybe start with 3 minutes, push it to 5 minutes a week later, to 10 minutes, and grow steadily by controlling yourself and regulating these emotions. So to start with the psychological aspects of performance evaluation, we have the self-perception versus reality, which is something that we've discussed in previous sessions. I don't know if you guys can hear me because I like to sit backwards, so I don't want to mess up the mic. But so with the psychological aspect and performance evaluation, there's the self-perception and the reality. So how our bias can skew basically our self-assessment. So you may see a lot of people that will do their analysis fundamentally, technical wise, and then they see a few ideas out there that aligns with theirs, and that develops a deep belief. So let's say, as an example, let's say as Mohammed, I went on TradingView. I've done my analysis, went on TradingView to the ideas section, and I saw a lot of people posting the same trade idea as mine. That is going to create a sort of a sense of belief in my personal idea. And then whatever I see the market is giving me at the time, I will always just stick to what my idea told me. And then you find yourself only executing based on that idea that you've developed belief and attachment to it, and you ignore everything else. Even if you see, certain red flags or areas where the market should actually start going against me, you will ignore all of these, you know, all of these warnings, and you will just stick to your own bias. So that is how our bias can skew basically our self-assessment. And then the other thing is the importance of data-driven performance in evaluation. So to give a little bit more information about the bias and how it skews your, your self-assessment. Let's say Alex, for example, he thinks he's a fantastic trader because he remembers his big wins, and his data shows that he has 70% win rate. That is very good, right? He may go through a week of losing, and then all of that confidence, all of that, I feel fantastic about myself, is going to go down the drain because you had one bad week. Your strategy was working for a month. You had that one bad week that affected everything, and now you think poorly of yourself. This happens to me. It happens to Alex. It happens to a lot of traders out there where they think that they're fantastic when they're having a good week, and then they start thinking, in a very negative way about themselves, and they connect their trading with failure in everything else in life, right? So that really affects your own self-perception of yourself, and your own perception of trading. You're going to think that you're a failure. Trading is not going well. Then that also goes into other aspects of your life, such as work, such as friendships, such as, relationship with your wife, with brother, sister, whatever. And you start treating everyone in a poor way, just because your trading didn't go in the way you were planning, and you had that sense of belief that you're a fantastic trader. Even fantastic traders go through, phases of losing. If you think of the best hedge funds, they have quarters of winning, they have quarters of breaking even, and they have quarters of losing. So you, as a trader here in the chat, always plan for those days. Do not think that you're going to conquer the trading market. You're always going to win. Yes, you may go in a winning streak for 2 years or 3 years or 5 years, but your ego can get in the way, and that can start to affect how well you do. So I'm going to pass this to Alex to discuss some of his, his previous experiences when he was making a lot of money, when he had a period of setbacks, and how he overcame all of these setbacks to become a much more mature, knowledgeable trader that he is nowadays. So Alex, the floor is yours. Please share your experience with our traders here.
Thank you so much for that, Mo. Like you mentioned, yes, and you're telling people that having winning streaks is good, but at the same time, I have noticed that your ego does get in the way and your mental state does change. So saying those things means that you could have such a good streak, and then you're not accounting for the risk. You're thinking of the positive, which is fine at the time, but you're not accounting for the losses that you're about to incur, because it happens. Everyone has those losses. So my personal experiences, when I was on a winning streak, I wasn't really thinking about all the losses. I wasn't really thinking about, I have to keep that money to the side. I wasn't really thinking about, I was just thinking about, okay, I have, that's the next payment, that's the next payment, that's the next payment, so on and so on. And the money was coming in. But that one day when everything turns, because you're just over leveraging and you're overdoing it, and you're being overconfident, that is the day that knocked me down. And then once I got knocked down, I looked at myself and I was like, I didn't have anything saved to the side. I was making money, but I wasn't really putting anything as a safety net to prepare myself for the losses, or for the bad days, or as people like to call it, the rainy days, right? I wasn't really accounting for that. So that was a hurtful lesson and experience for me to go through, because then I had to start back from scratch. I had to be disciplined again. I had to be accountable. I had to build my capital up again. I had to analyze the markets again, more in depth, analyze where I went wrong, what went wrong, how did it go wrong. You get those emotions and you get those thoughts coming into your brain, and you just start spiraling into a never-ending cycle of like, oh, I could have, right? Or if this or if that.
Yeah.
So the way me personally, how I managed to differentiate myself between someone else who's doing that and how I would have done it, was I took a step back. I was accountable for the stuff that I did, and I knew I messed up. I knew I made a mistake. I said that to myself. I looked at my trades, I looked at my charts, and I said to myself that I need to give myself the time to analyze, to understand, and also to heal. You need to give yourself time to breathe and to heal from what happened, because you don't want to go into the gambling instinct. You don't want to go into the gambling mentality, or let's revenge trade, let's put everything on the line to make that money back, because then I would have been in such a deeper hole. So what I did was I said, I'm going to step away. I'm going to look at what happened. I'm going to look at my wins. I'm going to look why I had those winning trades. How can I have those winning trades again? And how can I approach the market in that sense? Gave myself some time, stepped away, did some self-reflection in the sense of became more disciplined in my lifestyle, tidied up things around me. So, if I had any clutter in my life, I tidied up a bit. So I have like a state of clarity. And then I went back again to the charts. I went to analyze the markets. I looked at my strategies. I looked at my indicators. I looked at how I can find an opportunity in the market again. And I did the back testing. I asked for advice. I looked around the people around me, and I asked them, for advice from after they come back from such a big loss. And they all said that you have to get back into it as you would when you were like a baby. You just have to crawl, right? You
Yep.
crawl before you walk,
Exactly.
and then you walk before you run.
Exactly.
So I did the exact same thing, and then you compound your wins over and over again, and then you start rebuilding that capital. You regain your confidence. You regain the winning streak. You look at your charts again, and you do a lot more self-reflection. So that's what I did, me personally, to be able to come back from big loss in my trading career. Mo, what would you say about that?
I believe that this is beautiful, very concise. The fact that you created self-awareness to what you were going through, and actually analyzing what is going wrong, working on actually improving that. This tells you that you're gonna reach success in life. Because look, I never think, because I've had a lot of setbacks. I never think of it as a word failure, because failing is just quitting. When you have so many losses in your life and you fail and you just decide to quit and say that that is not for me, that is the definition of failure. However, if you fail and you keep trying and you keep trying and you keep trying, that is the definition of success. And success rewards those who try and who are patient, who are chasing their dreams. So I literally, for this session, I went back to all of the notes that I took in my journal entry, and I took down the most important things that I've faced over 10 years. I've literally done a lot of preparation for this session, because I want to help you guys out there to not fall in the same mistakes that I was going through and learn something. If you walk away from this session learning one thing, then it means that I've done my session correctly. So some of my notes that I took is that I would feel sometimes jittery and constantly checking prices the whole time. And I hesitate where I sometimes miss out on a good buying or selling opportunity. If you find yourself constantly looking, going from one asset to another and trying to search for an opportunity where your mind becomes unable to consume that information, then you're doing something wrong. Step back, close the charts, do something else, go on a walk, go meditate, go on a swim, go to the gym, cook something, just literally get your mind off of it for at least an hour and come back, you'll find clear opportunities. If your mind is feeling jittery, you're going to make bad decisions. So the solution for it is to step out and come back to find a better opportunity. The other thing is that when I face significant losses, I sometimes feel extremely anxious and afraid to re-enter the market. So we've discussed risk management numerous times. We've done a full 2 sessions about risk management. Obviously, significant losses, as in me back in the day. Nowadays, there's no such thing as significant loss. Every loss for me is calculated. I will not lose a certain percentage because that's how you reach success. However, if you face a significant loss, I would highly recommend that you take a break for the day, put your account on a side, and come back and have another war with the market the following day. You do not have to force it. You do not have to think that I need to make that money back. And you do not have to let that loss affect you mentally and psychologically to the point where you feel scared and anxious to participate in the market again. So literally, I've mentioned I've had a significant loss, and I'm afraid to re-enter the market. Even when my strategy is indicating that I should enter, literally, I have all my rules of entry are there, and I would feel extremely hesitant to participate in the markets because of that loss. So if you're in that boat, this is what you should do. Step back, come back the next day, and be confident. Wait for your strategy to show itself to you. And if you see it, enter the market with confidence. Put your stop loss where you don't lose a certain percentage that is bigger than you anticipate, and then go on with your trading day. The other thing that I wanted to mention, which is before I start my trading day, you guys know literally my trading plan. You have to develop a trading plan. Without a trading plan, you are in an ocean filled with sharks, and they're ready to feast on you if you're not doing things accurately. So what you need to do before you start your day, meditate. Get all these negative feelings, negative emotions out of your system, whether it's from your employment, whether it's from your children, whether it's from your spouse, no matter what it's from. When you want to trade, you need mental clarity. And to have that mental clarity, you can accomplish that by having a meditation session, clearing all the thoughts, and just having your mind observing and ready for trading. And that's it. So the other thing, after a long losing streak, take a week-long break and return refreshed. This is another thing that I've done. So sometimes we spoke about how when you feel out of sync with the markets or in sync with the markets, what you should do and how you should approach that. So there's a lot of times where the market is favoring you. Every trade that you take and it's profitable. And then you see yourself in a 30, 40 win streak trades. And you think that you are the Warren Buffett of trading. So before you get to that level, thinking that you're the Warren Buffett of trading, make sure that you take a break after significant losses or significant gains. Take a break, reset your mindset, and come back stronger. Because your ego, your sense of belief, you believing in yourself way too much, the overconfidence bias that we spoke about in many other sessions in the past, will actually trigger a response where it could lead you to lots of losses. So sometimes even when you make big profits, why do you see a lot of traders when they make a lot of profits, they end up taking a break and then they come back to the markets a week later, a month later, just they take a break, they made big profits, time to enjoy that profit, reward myself, reward my family, go out, buy a bunch of new clothes, invest, save it, do whatever you want with the money, but just reward yourself. Because the way you can grow in the prop firm industry is that, you know, like for me personally, the way I grew within the prop firm industry is by buying an account, passing, becoming funded, make a payout, and then from that payout, I will reinvest some of the money back into buying more challenges to grow the capital that I'm trading with, and to not overforce trades on the same account all the time, because anything can happen. You can lose that account, but because I was smart enough to reinvest in other accounts and passing and becoming funded, you end up having 3-5 million in funded trading accounts, and that is sufficient enough to withstand any setbacks on an account or two. You're not going to lose everything, and you're not going to be out of the markets. So always have a long-term plan to how you're going to approach this and how you're going to ensure growth over the long term. And then the last thing that I wanted to mention, and then I'm going to pass it on to Alex because he has a lot of exciting information to share with you, is learning from trading mistakes and losses. So I want to give you guys a homework today, and literally this thing that you're going to do, the exercise that you're going to do, you can ignore it, but this is for your own benefit. So if you want to benefit, you're going to go and do it. Go on your account. With WeFundYouTrade, we have an in-house journal entry. So you don't have to go and purchase a journal entry software and charge yourself extra money and extra fees to be able to journalize everything that you're doing. WeFundYouTrade gives you that opportunity all the way to you. And I'm going to share my screen with you guys in a bit to show you how you can use that and capitalize on that opportunity. So learning from trading mistakes and successes. I, for example, sold a stock early. In my analysis, I realized that I got scared by minor news without considering its actual impact. So basically, in the past, I would buy a specific instrument and then I will look at the profits, keep looking at the profits, and stay behind the screen looking and looking and looking, to the point where that makes me scared to miss out on these profits, where I end up exiting the trade way too early. before the trade actually goes to my take profit or my stop loss. Let the trade run. If you're constantly looking at your chart, once you've executed a trade, then you are not comfortable with the risk that you're taking. If you're not comfortable with the risk that you're taking, you're doing something wrong. If you enter a risk that your mind and your body is confident with, you're literally not going to look at the charts. You're going to set it and leave. And then you're going to let the market do its thing. It's either going to go to your take profit or to your stop loss. Either way, it's a blessing, because if it goes to your stop loss, you're going to take that as a learning opportunity, and you're going to learn a lot more from that mistake. And if it goes to your take profit, you're going to be very satisfied and happy that you've left it. You were patient enough to see your analysis playing out in real time. That is one mistake that I've done. So you also have, after a successful series of trades, basically you take your family out on dinner, reward yourself, and that gives you that emotion. You feel that whatever you've done in your trading, the patience that you've done, and you go and reward yourself with a nice dinner. You invite a spouse, you take her out, you buy some nice clothes for her. She's going to feel happy. You're going to feel happy that you were able to do that for her. You were able to support, protect as a result of your knowledge in trading. And that is going to, enable something in your brain that you will not reach to until you make your payouts. You make your payouts, you reward yourself, your brain wants more. You created that dopamine effect of getting that money in your bank account and using it to reward yourself. So when you go back on your next trading session, you're going to do better, and you're going to find that your trading is only getting better and better, and you're letting your trades run, and you believe that the market is going to either go to your stop loss or your take profit. So you're just letting it do its thing. So reward yourself every time. And then me, as an example, I experienced a loss, and then I went and I started reviewing my strategy. It's extremely important to review your strategy. Sometimes the market conditions is not going to give you all the rule entries for your strategy. So you might have to do some tweaks here and there without forgetting the initial strategy that you have. So you don't lean way too far away from your strategy. You just do a bit of tweaks to kind of be back in sync with the current market conditions, such as putting limit orders that we discussed the other week. Instead of executing market orders, you put a limit order 20 pips lower than where you initially intended to open your trades. That way, you might find yourself back in sync with the markets. If it's always stopping you out, dropping 20 pips against you, and then recovering all these losses and going all the way to where you want it to go, a limit order will solve that problem. So you just put a limit order 20 pips lower than where you want your entry to be. Your stop loss is 30 pips lower, and then you let the trade run. If it goes to your stop loss, then you're simply wrong and you have to accept it, where you just go back on that trade, analyze what happened. Did I follow all of my rule-based entries? Is everything from my criteria to enter a trade was fulfilled? And then you go on from there. And then the last thing before I move to Alex is basically simulate various market scenarios on the weekend, allowing you to practice your strategy without real money. Basically, what that means is backtest. Backtest your strategy, forward test your strategy, and understand if you're doing something correctly. You carry on doing it. You try to implement it every single time. If you're doing something wrong, you try to avoid it. If you have bad, bad behaviors in trading where you can't control your emotions, you can't control your risk, step back, leave your account for another day, fight another day. There's no need to force and, overtrade and, just for the sake of, I want to make money. You're going to make money if you follow your process, if you have a trading plan and you stick to it. And that's how you're going to make money. Otherwise, you're always going to lose. Even if you have a few win streaks here and there. So people are saying, what happened to the video?
1 second.
Sorry about that. We're bringing that back up. Bear with us. Can you guys see us? Yeah, perfect. I can see. Yeah, everyone's saying yes. All right. So guys, before I move to Alex, I'm gonna show you our journal entry tool in our platform. That way you can utilize on that opportunity. Can you host, please?
Oh, let me share. Yeah, there you go. Okay, cool, fantastic. Sorry about that.
Let me share with them. And then Alex is gonna share some of his experience about how he started, journalizing his trades, what he saw when he started journalizing, all that stuff, and then we will go from there. So, to show you guys, can you please confirm if you can see my monitor? Bear with me for a second. Can you guys see my monitor? Please confirm.
Yep, yes. Fantastic.
Yes. Okay. So this is my 300K funded account. I will go to my account history and you guys can see that Mokilani does not trade every day. I trade when I see opportunities. And to show you the trades that I took, basically going to my journal entry, I've lost 1, 2, 3, 4, 5 trades, but I'm still up a lot more than drawdown. Meaning, when I lose, my losses are controlled. When I make profits, my profits are always bigger than my losses. So the way you can access our journal entry, you go literally to account history, you go to list, and then you check all the trades that you took. So for example, you can see that these were triggered by a TP, these were triggered by stop loss, and these were closed out manually. I did not want to stay in this trade. I have a video about this trade, which I will share on social media platforms. So stay tuned for that. Follow us on social media so you can see the whole description. If I stayed on this trade, it was literally towards the end of the day. You can see that I closed it before the market closed to avoid paying overnight fees, swap fees on the trade. If I stayed in that trade, it never went to my stop loss and I would have made probably 10 grand or 11 grand on this trade. I had a very big take profit on that. And I was just willing to wait. However, never reached to my stop loss. I'm not going to pay overnight fees. That's just how I trade. I don't like paying overnight fees. I take the trades for the day. If they hit my take profit, that is good. If they go to my stop loss, that is absolutely fine. And then I just go on with my day. So first trade, closed it to avoid overnight fees. The following day, I took these trades on silver. They were all running in a decent amount of profits, did not go close to my take profit. And then suddenly the price reverted in a way that is not healthy. So it was developing a literal downtrend. And when that sudden move happened, you see massive bullish candles. And it just, the whole structure changed. I was like, I'm not going to lose just to stay hopeful. I exited these trades manually. We have this trade that I also have a video about. We have these two trades that I also have a video about. So go on social media, follow us. I will have them on my personal social media account and in the We Fund You Trade social media account to teach you guys further about my thought process. And then the last trade was today. I expected the Canadian dollar will be strengthening because there's a strong correlation with the Canadian dollar and crude oil. When crude oil is rising, you would expect the Canadian dollar to be rising as well. So I had a plan to sell the dollar CAD. However, it hit my stop loss and then maybe it started going in my direction. I really did not follow or track that trade properly, but I am fine with taking that loss as it's part of trading. You're going to make losses and you're going to make wins. The most important thing is to be patient, to look for quality trades that align with your strategy. And once you have that confidence, you have that strategy playing out, you can enter the trade. I could be entering, maybe 30, 50 trades. Yeah, my account allows it. I can go now and open a trade. But why? Why would I put myself in a situation where I could potentially lose because I'm not following my strategy? So journal entry, guys. Every trade that you lose, it gives you the open time, the open price, your stop loss levels, what time you've closed your trade, all that information. So go back on every losing trade, and that is your homework, and analyze what went wrong. Take notes. Buy a brand new notebook and literally make that as a notebook that you will take down all the notes of all of your losing trades, because that's how you learn. If you do that for over a couple months, you're going to find that your mistakes have decreased tremendously and your success is going to start increasing. And I'm going to pass this to Alex to literally share his experience with journal entry. And once he started doing it and analyzing his trades, how his trades changed 180 degrees. So Alex, the floor is yours. Please share with them the importance of journal entry and how it benefited you in your trading.
Thank you, Mo. So as I said before, prior to the conversation, was that when I had going back to when I had the big loss when I was starting to trade, and then I had to take a step back to look at my trades, that's when I started to journal. That was one of the first things I did with Mo's assistance, was to understand exactly where I went wrong and how I went wrong. So doing that made me self-accountable, knowing that, okay, I took this entry. Why did I take that entry? Because when I'm trading, I have my safety net. I have my rules. I have my the things I stand by for me to enter a trade. I have my strategies, and I also have my fundamentals that I follow. Saying that, looking at the trades where I had winning trades and then losing trades, being able to journal and looking back and reflecting on your losses and on your wins, it just teaches your brain, and it turns your brain to the analytical point of view, where you can start analyzing exactly why that went well and why that went bad. It could be things such as, what happened during the day? Was there news? Was there any big volatility movements happening? Was the gold on a rally and it just kept going through, so you managed to snipe it through? Or was it I did a reversal? There's so many other things when you're looking at trades. When you're looking back and you're doing back testing on your trades, is you start to understand and also analyze the market in more detail. You start looking at, okay, this trade went well because XYZ happened. And because XYZ happened, I had the perfect entry because I stuck to my rules. And that gave me the opportunity to enter at that point at a discount point, as I was saying, and it made me, and I went with the wave. And the same way on when it goes down and you're selling, is what happened. Was there did they hit the resistance, and did they retest, for example? And then you're looking at it, you're looking at your entry points, you're looking at your strategies, and you're looking like, okay, stick in my boxes. It's a good entry point right now. I'm not over leveraging. I haven't hit my stop loss limit for the day. I haven't hit my risk parameters, as I like to say it, for the day. I still have enough time for me to, I have space to squeeze the trade in. You look at the chart, you analyze the chart, you understand what's actually happening with the movements in the market, and you find the perfect sniping opportunity, meaning gives you the opportunity to enter at a discount zone where you can then ride the wave on a down trend or on an uptrend. Doing those things has made me become such more analytical trader, and also much more concise trader, being that when I look at the markets, I need to make sure that it takes my checklist, and that there's nothing else outside of my checklist that can be volatile in the sense that it's out of my control. If there's no major moves, fantastic. Then I know that wherever the entry point is that then I can take that trade, because nothing's gonna nothing's gonna make it move sideways. If there's big movements such as on a Wednesday or on a Monday or on a Friday, the days where you have those big market news and everything just goes sideways. If those are the days, then I look at my trades with extra cautious. Then I'm very, very cautious about my trades, and I look at it's like if I enter here, is this a good entry point? Yes. Is my strategy is it respect my strategy? Yes. Is my fundamentals correct? Yes. Can anything affect it? Yes. What? This news, the stats for this and that. Yep. Then knowing that I take that trade is I'm taking a calculated risk. I've done my best, and now it's in the hands of the market. But I've done my best, so it ticks my boxes. So then I know mentally that I've done what I need to do for the trade. What happens after the news or during the news or before the news, no one knows. No one will never know, and no one can predict, right? In case if you're doing insider trading, but let's other than that, that's how I will approach it. And being able to journal has helped me in that process from becoming a average trader, I was gonna say, or retail trader, to being a more conservative trader, knowing my entries and moving more into the intraday trading. Keeping in a position for a couple of hours at a time.
Watching Alex for me over the years, and literally, I would say the past 4 months was his biggest shift. For me to see that growth and to witness that what he's done, how hard he worked. He worked so hard towards it, and he literally earned it. I've seen Alex grow from being a retail trader to now he's literally on the way to becoming a professional trader. And he can literally do this full time, does not need a human being in his life, and he can take that success to unlimited, unparalleled, like to areas that he's never really like expected to reach. So for me to witness what he's done, and when you're serious, maybe a lot of you guys don't even go to the journal entry tab where you check your trades, but you have to be serious. You're investing in yourself. You're buying that challenge. You're using your hard-earned money. So if you respect your money, then you're going to respect the process that you're doing in order to open a trade. If you're just opening a trade for the sake of trading, and just because you want to make money, that is never going to work out. I'm telling you guys, I'm telling you this as a person who used to open trade, who had no respect for his own personal funds. And now I understand how hard it is. Because at the end of the day, mate, look, if you go anywhere, no one's going to give you 10 quid just for the sake of giving you 10. So you need to prove yourself that you're worthy of the money that you're trading with in order to reach to the level of success that you want. If you can't prove that to yourself, who's going to do it for you? So I know that a lot of people are very passionate about the markets, very passionate about trading. And the way you make yourself grow further is by literally sticking to your analysis, sticking to your strategy, to your rules, and not over trading. Your strategy is not playing out for the day, it literally means there is no trade opportunity. And that's, if you can take that out of the whole session today, and you can go and do the homework of going to your journal entry on any account that you owned, whether it was with us, with other companies, go and analyze every trade. Look where you did mistakes, because that's the only way you're going to learn. You learn from mistakes, and these mistakes are going to be the determining factor to your success. Because I've traded for so many years, and when I've never looked at my mistakes, I keep falling into the same mistake. I've heard people, doing the same mistake every single time on NFP, non-farm payrolls. Why would you want to trade that? It's literally a gamble. Opening, losing 10, 15, some people in some instance lost 30 accounts just to trade NFP. Wait for NFP. Let me buy an account. I'll go all in. Either gonna make me go to phase 2 or I will lose my account. Does that sound like a sustainable strategy for you to wait for every Friday of every single month, the first Friday of every month, and then just to blow up your account or either make it in one trade? That doesn't seem like a sustainable strategy to me personally. So if you want longevity in the markets, do the things that we talked about today. Maybe next sessions, we can explain things in a more realistic way on a board, literally like a lecture. And I hope this was helpful to all of you guys. I'm going to take questions now. And to announce the rewards for all of you guys that have been here till the very end, we are going to give 2 10K accounts as well as a discount for the remaining members. The discount will run out at the end of the day. And it will be webinar 50, giving you 50% off for being here. And we will also give 2 10K accounts for the best questions in the chat. So go on, shoot your questions, and let's pick a couple winners. They can chat with us on Discord to claim the rewards, and use webinar 50 to get your 50% off.
100%.
Any questions, guys? Let's see your questions.
What's your favorite strategy? Well, for me personally, I'll say ICT and SMC. That's what I use, and that's what has worked for me, and that's for me personally. Mo?
For me, I have a variety of things. I basically look at technical analysis a lot. When I mean technical analysis, I focus on trading patterns along with fundamental analysis. So I correlate my technicals with fundamentals. I try to avoid using any indicators. I technically trade based on price action alone. And that's what I typically do. How long until you were profitable consistently, and have you ever studied the Judas model? So how long did it take me to be profitable? For me, the first 3 years of my life, so I've been trading for 10 years. The first 3 years were consistently losing. I would have wins here and there, but I was never consistent with it. The following 2 years, I was a break-even trader. So every time I make profits, I end up either giving it back or make it, lose it, and then just stayed in that spiral for a couple of years. And it's because I'm an emotional person. I'm a sensitive, emotional person, literally, as a human being. I've worked a lot on that over the years, and that helped me become a consistently profitable trader for the past 5 years. So I would say I've been consistently profitable for the past 5 years, and I look forward to keep that up. We were okay. How many pips you set your stop loss? My stop loss on Forex basically tends to be 30 pips. If the price goes against me more than 30 pips, I'm technically wrong and I accept it and move on. I would say from
so many questions
from 30 to 50 pips.
While journaling, what are the things one should focus on and make sure to key in? Can you also recommend maybe templates for this? While journaling, what you should focus on? While journaling, I'll answer that question. I think Mo can touch down a bit. I think while journaling, one of the things you should look for is understanding what went right and what went wrong. Just getting those 2 things in your head, and then be able to analyze, go into your trades and look at why did you take that entry position, and look back. So go back test and see why did you make that decision to take it at that price based on XYZ. So based on the price, wasn't on the movements beforehand and on the candles before you've taken that. I think, do you agree with me with that one?
Yes. So based on your strategy, if your strategy tells you to take the trade, take it. If it doesn't tell you to take the trade, just avoid it at all cost. There's no need. even if you think that the price is going to go up, there's no reason for you to open a trade just because you think it's going to go up. Because at the end of the day, it is 50-50 and it could either go up or down. We have to give them a couple more minutes because we started a bit late. So how long until you were profitable consistently? Have you ever studied the Judas model? I've answered that. How many pips stop loss in your experience? Is it more profitable to focus on news or market structure? I would say it is more profitable to focus on yourself, focus on developing yourself in your own personal life, and that will give you success with what you do in trading. So if you focus on your meditation, on your psychology, on your strategy, and actually being patient to see that strategy playing out before you enter a trade, focus on yourself, and then your trading is going to work out. When will this code expire, please? The code will expire at the end of the day, which is 12 midnight UK timing. How would you manage account if you are down 5% and worried to trade more? Other than that, what you shared today on mindset, I mean, more strategy, example, lower risk, etc. Some tips.
So many questions coming in, guys. Yeah. The guys, we're getting overwhelmed by the questions. We're absolutely loving this, and thank you so much for your support and all of your questions. We're trying to go through it as much as we can, but
yeah. So when it comes to the to you being anxious about taking a trade, I would say wait until your strategy arrives. And if you see that strategy and you take the trade with a stop loss and take profit, at least you can justify taking the trade. If you can't justify a reason why you're taking that trade, then it means you should not be taking the trade. So please keep that in mind, Zoe. Always lovely seeing you here. And I'm picking Zoe as one of the winners. So take a note,
yep.
Zoe.
Zoe, if you could message our live chat support on our website,
or send me a DM on Discord.
If you're not on the Discord, yeah, you can do that, or ask for the live chats to put you in contact with us.
Do you trade a naked chart? I do trade a naked chart. I sometimes use 2 moving averages, the 8 and 20 for the daily, and the 20 and the 8 and 20 for the daily, the 50 and the 200 for the shorter time frames to execute my trades. And that is what I usually use, just a couple moving averages. Use code webinar50. Thank you, Alex. Webinar50 to give you 50% off. So head on to our website and grab your discount. What do you mean by liquidity grab? Liquidity grab is when the price drops below a specific structure to grab all the liquidity or trigger all the stop losses and go in the direction that you were hoping for. How to avoid scaling when we are in losing trades. How to avoid scaling when we are in
I think how to avoid losses when you're scaling. How to avoid scaling. Okay, I think.
Rupa, I will answer this in a DM. Maybe you can elaborate a little bit more. Do you use Fibonacci price confluence for technical analysis? Fibonacci retracement is a good tool. I've used it in the past. I used to see myself very confused with what I'm doing, so I stopped using this. And how do you figure out if you are a scalper, day trader, or swing trader personality without taking your current free time into consideration? That is a very good question. Sean is going to be our next winner.
I was going to say the exact same thing. Sean, I've loved everything that you've been doing in this webinar. Your engagement and your comments and your
Sean and Zoe will be our winners for the 10K accounts. Everyone else, you can get 50% discount using code webinar50. How do you figure out if you're a scalper, day trader, swing trader? You can figure out by backtesting. So if you find yourself losing a lot of trades when you're scalping, it means that scalping is not for you at the moment. You can be a scalper and an intraday trader at the same time, but you can do them on totally different accounts. So you can have an account where you scalp and you test your skills out on scalping, and you can have another account just for the sake of longer term trades. And that's what I would recommend. Once you see which personality trait gives you the best results, then you can decide what to go with. In your 10 years of trading, what is the one thing you would say to a new trader when it comes to trading? Only trade based on what you see, not what you think. And if you can't justify why you're entering a trade, then you should not be entering a trade. Okay. Risk management is always going to be key. Guys, we have so many more questions. We will basically take those in the next session. I want to thank every single one of you for today. And we will see you in the next video. Remember, webinar 50 gives you 50% off. Zoe and Sean, please send me a DM on Discord and I'll get you sorted with your 10K
Or use
accounts.
the live chat.
Thank you very much and see you guys in the next.
Thank you so much for that, guys. Thank you so much. We'll see you guys on the next session next week.
Next session.